Bang, recording. So, hi, welcome guys, welcome back after Easter. I trust you all had a good Easter break. I can imagine some of you got a bit too drunk. If you're anything like me and you got kids, you've been running around after kids, and you know what kids are like. So it's my son's birthday. Just going off topic a little bit. It's my son's birthday on the weekend, so I had to take him out and so forth, and took him and his friends out, and all of them. Tell you, this industry for kids is a rip-off. You know, I mean, you say the banks are crooks, but bloody hell. Anyway, let's press on. So, today's the 3rd of April, and I did put out a message earlier on just about any requests anyone wants to discuss here in live from today. So I've got the London Open strategy. So, let's just before we go into that really quickly, we're just going to look at what's going on in the markets today. So, remember, this is all about developing these sort of habits of things that we do. So we always look to see where our information's at. Right, so just bring this up. Alright, we can see that, yeah? Perfect. So we just want to make sure the time is set correctly. So it is GMT +1, isn't it? And then calendar. And then bang, see what's going on here. So you know, yesterday was Bank Holiday Monday, so there wasn't much going on. Tuesday, to get back to the markets, and we can see that there is, well, there has been PMI figure came out, better than expected. So with this figure here, by the way, PMI, do you see how these figures work? Do you remember what I say to you guys to click on this folder here, yeah? And then it'll open up and you can see what's what, right? So with this particular announcement here, what we're going to focus on is well, I'll show you something. Obviously, there's the whole previous, we've always got. Let me get a pen. We've always got the previous, which is gone. The forecast, which is currently priced in, and then the actual. So where you can see that the actual and the forecast are more or less the same, doesn't make much of a difference. But the thing to watch out for here is the 50. So this is why it's good to read these things here, yeah? So you see it says if above 50 indicates industry expansion, below indicates contraction, right? So in the markets there's always these things that happen, these like cycles, yeah, it's the best way to describe them as. So there's always cycles in the markets. So what you have is you have the expansion, the markets, you know, this is where they're building infrastructure and so forth and stuff like that, and it's starting to climb up. The market goes up, and then we get that boom where it peaks, and then the market starts to. So here's the expansion, and then we start to get the contraction, and then it comes down, and we get the recession, and then it does that consistently, yeah. So basically, it goes from boom to bust, boom, bust, and so forth, yeah. So just understanding that the economy does that, we can start to look at where we are in the economy. Really, I mean, to be honest with you, I can't really say we're fully out of the recession yet anyway. Remember something that you know, yeah, same as a business cycle. Well, kind of, yeah. So businesses do have their cycles also. So you're right in saying that, Patrick. You're right in saying that about the business cycles, etc. But then if you look at certain businesses, like the banks, for example, the banks don't necessarily go through. Well, I mean, even though we saw what happened with the banks, you know, the banks get paid every time money moves, and money moves every second. So their business model is quite unique in that way. But you know, Sainsbury's is always consistently serving clients and stuff like that. We've always got people going to buy stuff, but they'll have points whereby there's more buying takes place and less buying takes place. So I'd imagine during the summertime they probably see less, because a lot more people in the country on holiday and so forth. Christmas time they get a boom because everybody's buying their Christmas shopping and so forth and that type of thing. Yeah, so everything does have its cycles, but in terms of the economic cycle of the economy, you get this here going on, yeah. So when you see, for example, a stock market that's constantly climbing like this, people say, look at that, wow, it's going to the moon, never come back. It doesn't make sense to buy at the high, because you're still buying high up. Do you see what I mean? So the best place to buy in any cycle is going to be here, and sell here and so forth. So when things are going really, really bad and they don't look great, that's the time to start buying up at low price. And when things are looking really, really good, you know, they're so good. It's like, you can't go wrong. That's time to look at start selling or offloading something what you have and so forth. Yeah. So that's just a little bit on fundamentals there in terms of this. So anytime when you see these PMI figures and you see them coming out, and you can see, like, if we look here, they've all got they're all above 50. If they're below 50, that would be saying that we're going into like a type of recession. Yeah. All right. Perfect. So let's press on and just see what's going on for the rest of the day. So it's good to do this just to kind of like get our bearings. Remember I spoke to you about the gladiator is on the when he gets into the what do they call it, the Colosseum thing, and he touches the gravel in his hands to kind of like be one with where he is, that type of thing. Yeah. Right. So let's just scroll down really quickly and see what else is going on. So tomorrow, a lot more active in the markets as we can see. Crude oil inventories, again, that's back to its norm. So you should all be trailing crude oil inventories. They're usually good for the news trade. It's very good for news trade. Yeah, and you've got other figures coming out as well. This one here is going to be good as well. The ADP non-farm employment change. This comes out on the Wednesday, yeah, before the Friday's NFPs. So if we look down to Friday, non-farm payroll change coming out. So if I do this and just highlight that, what you're looking for is it's this figure here. Yeah. So do you see how the previous was really high, wasn't it? We had quite a high figure, but it still didn't bolster the market. It didn't send the dollar rallying. Really, usually you get a big, huge move in the dollar. We didn't get that with this one. They expect to come out at 190, so we're looking for a difference between 190 and the actual figure coming out on Friday. So there's a big day. There's a lot of news announcements coming out that we can trade. Non-farm payroll is great to trade the new trading strategy with as well. So you could see here, you also got news coming out for Canada. So you could be looking to trade dollar CAD, euro dollar, and pound dollar. And Aussie dollar, a few different currency pairs you can trade there. You just set them up really quickly and bang, you're off, because it's a really easy strategy to trade anyway. Yeah. So it's looking good. Obviously, China's on bank holiday, so that's on the Friday and the Thursdays you can see here. So it's good to see what's going on and so forth, especially because it's not where we live. We follow really what's going on in the West more so because it's where we live, isn't it? It's what we hear about every single day. People that aren't trading the markets are still going to know there's a bank holiday coming up in the UK. Somebody not trading may not know there's a bank holiday coming up in China and so forth and that type of thing. Yeah. Okay. Cool. Perfect. All right. So that's that covered. I don't see anything else in terms of news. Let me just do this and see what comes up on Google. This came out 7 hours ago about the worries about the US and China trade dispute. I mean, personally, I think there'll be something sorted out there, but we'll see. We'll see. Sorry, mate. Call happening. What does that mean? Sorry, Jason. I don't know what call happening is, mate. What's call happening? So again, you can see it's all to do with the same thing, yeah. Typically, what they're talking about to do with the China thing. There's a few things going on actually that we need to be worried about in terms of fundamentals that could change anything. I mean, even the dispute with like the UK and Russia. And Russia's now claiming that the UK is doing this, trying to point it at them because they failed in their whole Brexit negotiations and so forth. So the UK is looking for a way that they can sort of take the pressure off themselves and still show to be doing something in terms of like doing their job, if you like, in terms of the economy, in terms of the people, the government, if you like. So what they're saying, Russia's now saying, they're saying, I think that the UK probably killed their own, probably killed the spies themselves. Yes, live now. And they did that. They did that because you know how the government works, right? When something's going on in the economy, something that's quite big, typically we're getting new laws that are being written, yeah? So it's like, I'll show you this hand while I play this hand type of things, like the whole magic show, yeah? And you've got to expect that with them. Anyway, let's not spend too much time on this. See what else is going on in the markets. Let's go to the open range breakouts. Start with London Open first of all. Right, so for those of you, some of you aren't as clued up on MT4, some others are. So remember, any questions that you have, anything you're not sure of, you don't understand, always ask, yeah? So this button here simply gives me an overview of everything that I'm looking at here, yeah, of all my charts. So if we start with the first one, euro dollar here, see what's going on. London Open this morning. I don't know, many of you guys traded London Open this morning, but as you can see, we had a break to the upside, which is a very nice break to the upside. Because if we measure the range, you know, that's a 9 pip, 2 pips either side. You're looking at what, 13 pips in total. Say it's about around about here. So to the upside, you definitely got your move. That would have been a nice quick winner there for you guys. Now, if you were selling it, and this shows here 130, which would be 11:30, you wouldn't be selling it after 10:30. Yeah. So for those of you that take both sides, this is what I typically do a lot. And I know most people take one side and based on which direction the move average is going and so forth and stuff like that. And I say to a lot of people, you know, just take the one side in line with moving average. But the reason why I do that, sometimes people are a bit tentative as to what they should be doing when it comes to trading these markets, and you know, sometimes people get a bit what's the word I'm looking for? They get a bit worried if they take either side and both sides fail. But you know, this is trading. You don't win every day. You don't lose every day. You don't win or lose every single trade. You know, you take trades. You win and you lose, and that's the way it is. Your job is not to win every single trade. It's simply to execute according to the rules. So you're winning more than you're losing, because this is about making money. People get caught up and they forget that. So just add this, because this is psychology, but psychology needs to be added consistently all the time. So what happens in trading is this: it's not for everybody, but some people do exceptionally well at it and some people won't. People that can do exceptionally well at it treat it like a business. Yeah, so they understand that, you know, I don't know, for example, they sell some stock, they make some profits. With that profits, they buy some new stock, they pay some bills, and they put some in their pocket as profit, right? So they understand it's expenses of your winnings and that type of thing. They think in that manner, in that way. You know, they spend money to buy stock and so forth. So the reason why I take both sides of the open is because, in all honesty, you don't know which way it's going to go. It's the open. This is every morning. Every situation happens in the morning. Even though it's the same, it's still quite unique. But you still got a load of traders coming in the markets. If the market breaks the upside, bang, we go long. If it breaks the downside, we go short. So the way that I like to trade it, and so I'm going to show you guys, this is what I do personally. Yeah? This is so you can see what I do, even if I've said to you do something else. You know, for some of you guys a bit more advanced than others, you can actually push forward a lot quicker than others. So what I do is I take both sides of the trade. The one that goes I take, the other one I simply cancel. And that's how I do it all the time. Now, if, for example, I get a situation where the market pops up, triggers me in for a buy trade, and starts to push down, yeah, and then comes down to and I've got a sell stop here, if I see that it's failing there on this side here, I don't just take the loss and cancel everything, I take both sides. So I should end up at a break-even trade. Does that make sense? So if I'm risking one to the upside and one to the downside, so it looks like this, so if I'm going to buy one and sell one, yeah, so I want to go long on this trade and sell this trade here, yeah, then what I do is I take both sides of the trade. So if it comes up, gets me here, and then comes back down and does this, I'm going to lose on one but win on the other. Now my -1 and my +1 equal 0, right? Everybody gets that, yeah? Whereas if I what's what I'm looking for? Bear with me 1 second. Are we talking about on the London Open, Roger? Alright, so on the London Open, just so you guys know, yeah, you are, okay, perfect. So again, with London Open. Now with London Open, I have a tendency not to be as quick to run my profits, my stop loss in that way. What I tend to do is go to break even when I get the opportunity to, and then leave it. What I like to do is I like to hit my target, because what you will notice is most of the time, with the London Open, it will run up to your target and hit your target. So like I noticed like a lot of beginners, they don't do anything with their trailing stop, and they get a lot better results on their London Open. We're talking about the Opens, yeah, the Opens here, not supply and demand and so forth, but we're talking about the London Open, because you're all trading the same Open, you're getting in the same place, you're getting out the same place, you're looking to take profit the same place as well, yeah. So you don't need to have a 2-pip trailing stop on it. You can, if you like. I mean, one client I know, he has like a 5-pip trailing stop on it, and he says he gets a bigger part of the move. For me personally, the reason why I don't have a tendency to trail my stop loss with this is just because I don't do it to the downside, so I don't do it to the upside. In other words, if I don't do it with the losses, if the trade comes back in here, ticking around, and I don't cut it here, then I don't cut the winner short neither. I let them both go to target and do what they're going to do. Yeah, that's how I do it. So we always teach you guys for safety and so forth. But what I would say is that you have to be comfortable with the fact that not every trade is going to go in your favour. So, and a lot of you are. So I would say the best thing, this is what I do anyway, is just let it run. Let it run and see what it gives you. A lot of times you're going to find it's going to hit your target anyway. Do you understand me? And London Open works, so you find yourself up more often than not anyway. When it doesn't work, it can have like the odd times when it doesn't work, or it can have a week or two where it might not work. Yeah, and obviously it's not nice when that happens, but that's part and parcel of it. But we can't take those 2 weeks, put that into 1 month and say, you know, this month X, Y, and Z. Yeah. Tokyo, I don't never trail my stops on Tokyo, Roger. So on Tokyo, we'll come to Tokyo. I never trail my stops, by the way. Yeah. So we'll come to that. Because of the time, I just don't have time to. That's why I like it so much. It tends to hit my take profit more than any other trade. More than any of the others, because I'm not there in front of it as well. Yeah, it's a big thing as well. Sometimes not being there, you can't get in the way. Yeah, because a lot of times when we manage a trade, we don't manage it with a set of rules. We manage it with a set of emotion as opposed to discipline. Yeah. So let's click through the rest and see what they've been doing. So this one here is the pound dollar. So pound dollar, you guys should have taken this. You'd have easily got your target. You know, the thing rallied up 24 pips or so. So you'd have done well there. You wouldn't be in on the short, but this here is a perfect example of how the market can break either side and you can win on both. And it happens a lot more often than not. Yeah. So people have a tendency to judge their trades or judge situations based upon their last. So it's on whatever happened last. So let me see if I can give you a good analogy of this. You know, it's just like when somebody goes to the beach and they've got a seat somewhere and it's like, I don't want to sit here again because it's the best seat, I've got the best view. You know, if you're a guy, you could say, you know, I can see all the nice girls walking past and I've got the sun and, you know, I've got quick access to the bar and so forth and I haven't got to move much. Then they want to do the same thing again and again and again. It's that kind of thing. We look for something that's comfortable. When we find it, we stick with it. So people like routines a lot, yeah? It's like, so most people typically will take the exact same route to work every morning and the same route home every evening, yeah. And the reason why they do that is because, you know, I don't know if you guys have ever studied this. Obviously, psychology is a bit more than just, you know, accept that you can lose some trades and, you know, don't get too emotional about your winners. It's a lot more going on. So I don't know if you guys have looked at this, but we have 6 human needs, yeah. Now, would I say it's set and forget, Patrick? Yeah, it is very much set and forget, because what happens is, so if I can get in the morning and if in the morning I can be in front of my PC to trade it without nobody disturbing me, what I do is I put the trades on and then typically I'll shut my screen. It doesn't mean I'll shut off my PC on my laptop or anything like that. I might want to listen to something as I'm getting ready, yeah. But it is set and forget. I do walk away, I do leave it. I might check it just before I leave, but I'm more likely to check it only if somebody calls me and says to me, look, I'm doing X, Y, and Z. Then I'll have a look, and then I might adjust something if I see something to adjust. Like if I see it's moved in my favour quite a bit, I might say, oh, let me put my stop to break even, move this here, put that there, and so forth. But that's about it. I don't go overboard on it to any great degree. Yeah, perfect. So same thing here, nice move here. So 6 human needs. Let's get back to this. So the 6 human needs, I don't know them all off by heart, but one of them is we have a need for certainty. And then we have a need for uncertainty, yeah? showing up handwriting. There you go, I'm writing cursive. Oh, learn that at school, not bad, huh? Never learned to do it with mouse at school though. So certainty and uncertainty, two of your basic human needs. Now, think about what that means. So, we want to be doing the same thing consistently to a certain degree. We want to sleep in the same bed every night. We want to wake up in the same bed every night. We typically, the majority of us, we want to. Those of us in the room that are men, obviously, I'm talking mainly to a male-oriented audience, and as a male, obviously, if there's any women here, I don't mean to offend, so don't take it the wrong way, please. I know this whole feminist angle that's going on these days, and say the wrong thing. People are quite sensitive as well. Say the wrong thing before you know it, you're being shot down on social media and everywhere else. Anyway, so just getting back to what I was saying with the human needs. So you want to wake up with the same woman in the morning, don't you? Yeah. And go to sleep with the same woman typically and stuff like that. Some of you might be there. Some of you guys might be thinking, like, no, I'm going to switch every morning. But you don't really, do you, in all seriousness? So it's that type of thing. We have routines and things we like to do. So we like certainty, yeah? So, but then we all like uncertainty as well. Now, uncertainty, so certainty is like, so for example, I wake up every morning, I trade London Open, yeah? I know I'm typically going to get a breakout, and we'll look to buy here and sell here, for example, yeah? So, buy stop, sell stop, right? So I'm looking to sell here and buy here, yeah? Okay. So there's a certain amount of certainty. I know what I'm trading London Open, I know why it works, I know what happens this time in the morning, the volume comes in, kicks in and so forth. Okay, brilliant, great. Then the uncertainty is what? The uncertainty is a bit like, now, let me close my eyes, let me see what's going to happen next. So I've got a bit of uncertainty, right? But it's easier to do once you're at break even, isn't it? Yeah, because you're at break even, you can turn around and say, at that point where you break even, you could turn around and say, well, I've got all that, that's certain, that's obvious, that's going to happen. Now let me look for something else that's a bit uncertain, because that's a bit exciting. It's a bit exciting when something isn't as likely to happen as something else. It becomes the uncertainty of it. I'll draw your attention to the National Lottery. Lottery is a typical one, right? So with lottery, same thing. If you notice that with lottery, you go there and you pick these 6 numbers and whatever they are, and you pick 7, 13, 40, 44, 26, 1, 2, 3, 4, and then 32. So you pick 6 numbers, yeah? These 6 random numbers that you picked, and then on Saturday or whatever day it is, you sit there and you watch the National Lottery to see if you're going to win. And then what happens is typically you lose. You don't win the whole jackpot because the odds are heavily stacked against you, right? But a lot of people will do that because it's that whole. So you've got a certain amount of uncertainty. You know what's going to be happening. You know what you can potentially win to a certain degree. You know how to check the numbers and this and that. You know how the process works. But the uncertainty there as well is that you could win big. And that's the whole for that moment in time. Yeah, we don't want to use that in the markets. Yeah, that's why we want to be more like machines or robots in that certain way. So, and the reason why that's important is because the more that you do something the same way, the more likely it is, the better you become at doing that thing consistently the same way, right? You get that, yeah? You guys have got jobs, you understand. Those of you that do have jobs, there's certain things in your jobs that you do faster than anyone else. It's like, I don't know how many of you guys have an accountant. You ever sit down with your accountant while he's working things out, and he doesn't need to look at the keypad when he's typing numbers on the calculator to work them out. Now, that's not just the gift he's born with, it's because of the amount of time that he's been doing it and so forth. Make sense? Yeah? Perfect. So let's see what else is going on. So that's pound yen. Typically, when you see pound dollar does this, pound yen typically will do a lot of the same, yeah? Not exactly, but a lot of the same, yeah? Euro GBP. Now, Euro GBP, you'd have been stopped out straight away on the long. It triggered you in and came down and would have stopped you out more than likely. The sell, you would have got paid out on, possibly. Yeah. Look how tight that range is. That range there itself is 5 pips, right? So 5 pips. So you're looking at 9 pips. Oops, sorry. Yeah, 8 pips. You would looks like you would have just got it with that €1 pound, and then dollar Swiss. See to the downside, nice big drop, bang, hit your target. Done safely to the downside, but it'd be too late for you guys because by that time you'd cancel it. 11:30. More news about Trump. We'll look at in a minute, and then dollar yen, and dollar yen, bang, breaks out straight to target, and you. Oh no, actually no, it didn't. Broke out, dropped down. That would have either stopped you out, yeah, or break even. Now you see, this is when we're talking about this now. Scenarios like this are perfect. Look, if I'd have said to you, I'm getting in here, put my stop loss here, and then my take profit here, and just leaving it, I would have been stopped out. That happens sometimes. I don't care. The truth is, really don't care because I don't tally up in that way every day based upon what happens in the markets. I don't decide whether it's a good day or a bad day, whether I won or lost in the markets. I know I have a strategy that works, it pays out, so I just trade it. As simple as that. So I treat it a lot like it's a job, but I get paid, you know, a lot differently than I would if I had a job. Yeah. So treat it like it's a job, and the benefits are the way that you get paid would be a lot different to what you would get in the job. Yeah. So let's see what let's look at London. New York open. Yeah. Let's look at New York and see what that's doing right now. That's not the open. I don't know why that's up. That could well be up. Let's get New York. Here we go. What am I looking at? Let's just check the times on this. So that's closed out. That closes out at 1 o'clock. That's correct. Yeah, that's just broke to the upside. But let's just measure that. 56 pip range. Anybody want to take that? No, hell no. So that's too wide on that pound yen. Let's go back here and look at the rest. New York break. Okay, again, yeah, we can see that, right? So if I do this, Control and I, bring up this indicator box, double click here on the indicator, and then I come here and you see where it says text color? I'm going to change that just so it's yellow, easy to see, and I'm going to change the show label to true. If I do that, I can see it's a 43 pip range here, straight off the bat. So it's way too wide. Yeah. Euro dollar. If I do that, oh, no, euro dollar's not too wide. Euro dollar's okay. Euro dollar might be okay. Now, this here, this euro dollar trade, I like this as a sell on my supply and demand. To be honest with you, look at that. I like that as a sell on my supply and demand. So I'm not going to take that as a breakout trade because I mean the range isn't that bad, but it's not the widest. Now, I think I spoke to some of you guys where you mentioned this before about trading it. What I'm going to say is every time we take a trade, we make that own decision ourselves. I trade supply and demand, so if I see a setup, I'm going to take it, and that's what I see right here as a setup. Typically, I wouldn't go against this, but what I'm going to do is I'm going to sell the euro as that type of trade that is as what's it called? As a break to the downside, if you like, in that case. So let me switch through and see what else is going on. 9 pip range, that's not a bad range there, so I could take that one there. Right, dollar Swiss. Now I'm already in a dollar Swiss trade on the buy side, as you guys can see here, so I can't really go against that trade, otherwise that would be a bit weird. So I'm going to do this. If it's going to stop me out and take me out here, I'll lock in 15 pips. See how that plays out. So I'll be looking for a buy. Dollar yen could be setting up for a buy trade or even a sell trade here. So 2 pips above the range is going to be just here. We'll put my buy stop in there. Buy stop here because we can see. I mean that's a nice range. That is 16 pips. So this is how I do it. I've got 2 pips there to the downside. Sell stop. Bang, I leave that in place and let it go. New Zealand dollar, let's see what that's doing. New York's gone here for the New Zealand dollar. You don't want to be trying to get in that now. That's way too late. It's a nice range as well. Nice range there, you know. So we'll see how that plays out. the moment. Dollar CAD. Now dollar CAD's one I really like a lot of times, but dollar CAD is just like tanking and tanking and tanking. Look at the range on that. 45. Ouch. Way too wide. This looks a bit wide as well. I think this is about 20, 25. 20, there you go. 20 pip. 20 pips alright actually. We could take that. 2 pips above this. Let's see. I'll take that. If it breaks there, then I'll take it. And then 2 pips below here. Let's see how that pans out. And then, I mean, I think the range here is a bit wide, isn't it? Yeah, 50 odd pip range. Alright, so that's the New York Open. Now, is there anything different with this Open and the other Open that I trade? With the London Open and the US Open? Just the times, that's all it is. It's just the times, yeah. But as we're taking the exact same trade, yeah. It's the exact same thing that we're doing here. Taking the exact same trade. And then the other one we'll go to is Tokyo. Right, so let's go Tokyo. Now, pound dollar and euro dollar, they're at the front, but to be honest with you, these two aren't the ones that you necessarily want to be trading, but you can trade these for the opens. They do work, they take a lot longer to get to target, yeah. Again, same thing, 2 pips above. So all I would do is, as I come here, and I'll do that, right click, trading, put in my buy stop, you can't put it in because the price is above, and vice versa. So look at this, this could be a bit late for this entry here, but there's a sell trade here setting up on pound dollar. Ah, got an order in place, perfect. I just needed to push up a little bit just to collect that order, and I'm good on that one. Should fill it now. Should fill it now. It hasn't filled it yet, but it's getting ready to fill it. So we'll see up here when it fills it here. Oh, it's 2 bit spread at the moment for some reason. Okay, so we'll leave that for now. When that triggers that plays in. Alright, so supposed to be on Tokyo here, aren't we? Am I missing something? No, we haven't switched yet. Tokyo. Right, bang, been triggered into cable. About time as well. It took a while, didn't it? It's cable one there. So see how that pans out. So this is not Tokyo. So bear 1 second. So what happens with these profiles, and the reason why you're seeing my profiles all out now, by the way, screen dumps. Can you guys see all right? Can you see my screen okay? Where's this? Here we go. No, you guys can see it okay. The view that I've got here is that you guys can see it okay, so it should be good. I know, I think it's frozen, is it? No screen grabs for WhatsApp. Oh, did I dick any? It's a bit late now. It's moved, isn't it? Sorry, mate. Yeah, you're right, but it's moved. So sometimes trades come up and they're gone. Both of these are moved now. One's up 4 pips and one's up 1.2. It's going to be a bit late for anyone to get in. That's the only thing. So, do you see what I mean? It's starting to run off now. What we're going to do. Tokyo. So, alright, Tokyo. So, again, you want to measure the range. Make sure that it's not too wide a range. 12 pips, that's a nice range there. Now, dollar Swiss, this one here, you would have been stopped out because, look, if we take 2 pips below the range just to here, you see that's dropped 8 pips and then come back up and stopped you out. And also to the upside, if we do this, 2 pips above, and do that, you can see here, that you would have been stopped out because it popped you up and then popped down and stopped you out. So that would have just been unlucky, and that can happen. You know, sometimes you're unlucky, aren't you? Yeah, can't help it. So such is life. Dollar Swiss is usually the best one actually on Tokyo, for me anyway. Let's just say dollar Swiss. Why it doesn't, I don't know. Again, with the profiles, if you start moving things around and changing things, it will stay like that on the profile. So if I switch this to supply and demand, for example, and don't change it back, it will show like that on the profile all the time. Yeah. So the orders that we got here are for the US Open. Yeah. So on this one here, oops, something worked out for you neither. To the downside, you've been stopped out. To the upside, though, you've done alright, right? So you'd lost on one, the other. You break even. You got double rebate. Does that make sense? Yeah. And this is how I think when I'm trading these. Euro yen, same thing. Yeah. Euro yen, dollar yen, trade exactly the same way, more or less. Have a look at it. What's driving these two pairs then? There's one commonality that we're seeing here. It's what? It's this, isn't it? It's the JPY, yeah? So when you see this and this moving quite the same, expect pound yen to be doing more or less the same. So if we look at pound yen, whoops, do that, you can see, again, same sort of thing, drops and then goes back up again. So that means there's 3 trades there that you would have made money and lost on. So you would have been at break even on both of them, 1-to-1. Does that make sense, yeah? Dollar CAD. Now, dollar CAD could be a bit wide, that range. Let's double check. Yeah, the 36 pip range, you don't want to take that one. Forget it. That's way too wide. Big guide, because it moved nicely. And sometimes it's like that. Sometimes they have big ranges, and they still continue and give a smooth movement all the way. Sometimes, but not always, yeah? So, but it's still higher risk. You don't want to get stopped out on one of these that's less likely to break. Because remember what a London Open or US Open, Tokyo Open is. They're a breakout strategy, so it's consolidation and then break. Do you understand what I'm saying? Yeah. Perfect. So, any questions so far? Aussie yen. What's the common denominator in this? It's the yen. Yeah. That's the reason why a lot of times what this will do, it will break and then keep going instead of coming down. It will just go one way, and then you'll find you get 4 or 5 winners. All overnight, when you wake up in the morning, bang, you made a bit of money. Do you understand me? I think those people that don't trade the Tokyo breakouts are missing a huge bit of potential there of trading. You're missing out on some huge trading opportunities. Do you understand me? I think that if I was you guys, I'd be trading. I'm going to break even now with this. +1 pip locked in. Maybe not. There you go, 1 pip locked in. On euro dollar, pound dollar isn't quite ready yet to go to break even, so we've got to leave it and see what it's going to do. Leave that there. What's that stop loss? Size is 8 pips. I'm going to put it just above here, just give it extra bit of a buffer for manoeuvre. We'll see how this pans out. We're still waiting for this to move in our favour. Really, it's not really moving much. If I do that, it's not moved enough in our favour yet. You know, we need a bit more of a drop on that. When did I buy Aussie dollar? Aussie dollar must be on a breakout trade, wasn't it? Yeah, cool. So let Aussie dollar play out. Let pound dollar play out for a little while until it starts to until we get some profit on these two. There's no point doing anything. And then we got these ones, and we let these ones run as well. Yeah. So back to here again, Tokyo with the yen, same thing. Yeah. So that's any questions so far on the open breakout strategies or anything to do with these strategies at all? I think we're going to see a sell-off here. Bang, rejects it here. Bang again. You can see it selling off. Look at that. I wish I'd have got it here. Bit gutted, aren't I, on that one? Well, missed out on that one. Would you do both and euro dollar for Tokyo Open or just one? No, I'll do both of them. do both of them. With the opens, yeah, a lot of times you'll see me, see how quick I place the trades, you'll see me place them just like that. And on the opens, a lot of times I would do like 7 or 8 pairs on the opens. Neil's the same way. When you speak to Neil, Neil will do loads on the opens. You know, because you know you've got, you can use supply and demand, you know, but I wouldn't use it to indicate which way the breakout's going to go. So typically a breakout's going to go with the trend, yeah. So you don't need supply and demand in that way. If we just get a clean, let me just close these because you guys don't need to see these, yeah. That's not enough profit there yet to do anything anyway. So with the supply and demand, right? So let's say here, for example, I decide I want to put supply and demand in place, yeah. Let me show you something. And this is why I say to you guys, stick to the one strategy. You've got your supply and demand. I'm not saying ignore it, but stick to the one strategy that you're trading. So let's say we took this level here. Yeah. So at this level here, you might say, I want to sell it here. Yeah. So let's say you put your sell stop here because it's got to come through. Yeah. It'd be a limit, it doesn't matter. Market comes up here, triggers you, comes down here, and you think, oh look, it's going in my favour. On either smart one, this thing's going to keep falling. Yeah. What you've just done is just traded a different strategy on the open. Do you understand that? Yeah. The reason why we trade the open is because we want the extra added volume that's coming in, that's going to push our movement direction in one way or another. So we don't necessarily know where it's going to go. Yeah. So at this point here, you would have missed out when you could have, if you had both sides. Here you'd probably got break even, but here you'd got one win, one loss. So you'd have got 2 rebate payments and 2 moves out of it. Do you understand me? Now, the more that you trade and longer you're in the market for, also, yeah, and I don't say there's a right and wrong way of doing this. Understand that if you decide to trade it in the way that Patrick's just said, you can do that. And if you win more often than not, then it's fine. You know, I've always said this. I don't claim to be the holy grail in anything. Nobody is. So I had a guy once said to me, I trade by the moon cycles. And he told me he was making 50% a month. 50% a month is pretty huge. He told me he was making that by trading by the moon cycles. You know, I mean, he was at a group that I was teaching. My question to him is like, what the hell are you doing here then in that case? You know, because nobody's promising 50% a month to nobody. So if you're making 50% a month, maybe you should be up here teaching. But of course, it's trading based on the moon cycles. You know, he couldn't explain his methodology neither. You know, so, but hey, it's what it is. Yeah. So if you think it works for you and it's good for you, then use it. There's nothing wrong with that. For me personally, I like to stick to where the breakouts trade. One of the reasons also is because I've been trading breakouts for so long, I know they work. So, you know, it's what they call like old faithful, isn't it? You heard that saying, yeah? Yeah, no, good question. Good question. Thanks for asking as well. It helps as well when you guys ask questions, because it helps you get better understanding and clarity and so forth, isn't it? Yeah. So that's what's going on with the opens and so forth. So we trade them. We know we can't win them all. You can't lose them all. You just keep trading them as you go along, and that's what it's about. This is about volume, yeah. That's what it's about. So pound dollar now is starting to push down quite a bit. 6 pips in our favour. So now I can look to go there and lock something in, break even, see where it's going to go. Yeah. And then I just look for a target. What target am I looking for? I'm looking for this area here first of all initially. Why? Because this is the area that I'm worried about it breaking through. There's a wick at either side, so that's quite a wide range as well, 12 pips. It has to break that, you know. And then the euro actually broke through it, so that's not bad. The euro, what's the euro up by now? 15 pips, 16 pips, not bad. So, but you know, I need to see more on this, otherwise this isn't going to push the way through. I'd like to see it push the way through. Do you see what I mean? If I do that, do you see that's gapped? Yeah, that gap. What I'm going to do is I'm going to come here. If I'm wrong on this, let this thing come out, take me out. If I'm right, then let it run. Yeah, and we'll just see from there. Yeah. So there was some couple trading opportunities we got to get into on this one here. This has done the same thing. It's gapped the same way. We'll see how that follows through. Yeah. Now a lot of people like to keep this open and start looking through. I just close it. I don't need to see that. I'm not trading it based upon these prices because that's emotional. Do you understand me? I'm trading it based upon the movements of what it's doing. Yeah. There's no reason why this thing can't keep pushing down to the downside. And euro dollar. I mean, that's a clear gap. Do you guys see that clear gap? Yeah. If I do this. That's where it closed, and that's where it's opened. Almost a pip gap there, yeah? See that? Cool. So we'll see that, see how it goes. There's no reason why this can't keep falling neither, yeah? So bear that in mind. Remember we spoke the other day about about what the markets do, yeah? Higher lows, and so forth, yeah? So it could well be still pushing to the downside. We're not going to go against the market. Lower highs and lower lows, exactly. Yeah, so we just follow it through and see what it does. If it follows through, it follows through. We've got a nice move for the day. We can keep going with it. If it doesn't follow through, it doesn't follow through. Do you see what I mean? So, but either way, we're doing alright on that. So, alright. Any more topics of discussion that you guys want to go through? No? Or just want a reminder of what we're looking for? Yeah. Do you remember what we're looking for? Look at this green. Look at this red. Look at this base here. Rally, base drop. What does she do? What does she do? What does she do? Comes back up to here and then sells off again. Yeah. But it's what it is. It's like one of the things I want you guys to look at is the movements pushing up. See that drive? So that drive there tells me that there's something good at this level here. There's some orders sitting here waiting the way it's driving up to collect the orders. That's what it should be doing. So let me just quickly do this actually. Dollar CAD. Dollar CAD, right? So I just want to bring up dollar CAD because I think so I spoke to someone this morning about it. If I do this, plain, right? Perfect. Just want to show you guys something. Show you guys something. Alright, so this morning I had a call about dollar CAD, and I think it was, I can't remember now. Yeah, that's right, you mate. What level was you in at dollar CAD? I think it was around about here somewhere. No, around about here somewhere. Can't remember. Yeah. Do you remember, Rog? 71. 2871, yeah? Okay, perfect. Right, okay, cool. 71. So, dollar CAD this morning was a tricky one. Remember, I was like, I'm a bit unsure with dollar CAD. I think it can go either way. What it was is it's when you called me, I was trying to do a few other things all at the same time, so I thought I'd bring this up in the group. It might be worth answering then, just for everybody. Yeah. So you did well to get out of that break even, by the way. So do you know what it was? It's just the way that I felt like if you look at the price, what it's doing, the price bars, you know, it seems to be slowing and slowing, but no real pushes. And then at this point here, do you see where it's kind of like almost like sideways movement? So I wasn't sure about it. That's why I was like, I think it can go either way. I'm not 100% sure about it. But now, if I do this, if I look at this here, look at this big drop from here. When this thing comes up back up here, this is going to be a good sell opportunity to the downside. Do you guys see that? So this could be a good sell opportunity to the downside. 15 pips stop loss in place. I'll see how this approaches, but I'll leave the order in place now in case I can't be around when it gets here. Does that make sense, yeah? Let's bring up our supply and demand. See what's going on there. It's dollar Swiss. Dollar Swiss is still pushing up at the moment. It's what, 19 pips locked in on that one there. Leave that, let it go. See where that's going to. Okay, so supply and demand. Bring up my template. When you keep taking it off. So this is dollar pushing up. So if dollar's pushing up, is anybody here trading the euro dollar with me and pound dollar and so forth? if that dollar's finding strength, this should be finding weakness to the downside. Yeah, do you see that, Roger? We should be getting pushed to the downside with that dollar, with the dollar rally, and it should push down. It seems that the euro dollar is probably pushing a lot more. Do you see that? Euro dollar pushing a lot more, yeah? Cool. Did you guys see how I managed that position, yeah? Once I had my level there, moved it above, it's going to come back up and retrace that. Oh, you missed the euro dollar. That's alright, no worries. But did you see did you see how I moved my stop down just to protect that position and see what happens with it? If it keeps pushing down, then we keep getting a move. If I did this and went back to New York breakout, that there still hasn't broken to the downside yet. That breakout trade still hasn't worked, yeah? 25. Right, cool. So I don't think there's much more to go through. We've got about 8 minutes to wrap up if there's any questions. Otherwise, tomorrow I'm going to give you a suggestion, see what you guys think about this. If you guys got anything you want to discuss, always put it forward. Just say in the group. Just put it in the group. You know, in the live room, can we cover this? In the live room, can we cover that? I think one of the things that's important that we should cover is this pattern. And this pattern here, don't you think? Drop base rally and rally base drop. I think if we cover these two, the reason why they're so good is because the indicator doesn't find these. It doesn't find these. It finds the rally base drop and the drop base rally. That's what it finds, as you can see clearly from these. Yeah, that's what it finds. These. You can see how it finds these, and these are great patterns. But we are missing out, aren't we? You with me? Yeah, we're missing out on this. Yeah. Excellent. So we'll cover that tomorrow. And anything else that you guys want to go through, let me know. But we'll do a wrap up here. I was a bit late getting in, so I wasn't as prepared as I'd like to be. Just to wrap up, I'll let you guys know. On the weekend, I took my son to Flip Out. If you guys have got kids, your kids will love Flip Out. But my kids told me, so when it was my son's birthday, and he wanted like his 2 cousins and his friends to come and stuff like that, so I took them all. It's extortionate, by the way, these things, you know, for what they get, to be honest with you. But it's kids, isn't it, right? So anyway, so my son decided that it would be a good idea if I went in there and I jumped in the pits of him and stuff like that. So I did. Felt a bit silly as the only real adult doing that. Most people just stood on the sidelines. Ended up breaking my toe. So that was a bit like, ouch. So it's taking me a bit longer to move around these days. Well, I mean, it will heal within a week anyway. So anyway, look, enough of that. I'll speak to some of you guys today as we go along. I know it's crazy, right? And then what we'll do is we'll continue tomorrow with live room and so forth. And happy trading. And again, remember we're trading. The more you do it, the better you'll become. Chat later, definitely. Cheers, Roger. Thanks, Patrick. Thanks, guys. Thanks everybody for being here, and we'll speak to you tomorrow. Sorry, I'll speak to some of you today. Warren, any questions, anything you want to ask me as well, feel free to call me, yeah? And that's any of you guys in the room as well, by the way. So I'll speak to you guys later. We'll sign off now, and I'll put this up for you guys to see, yeah? Thanks a lot. Thanks again, guys. Bye now. Bye. Later.